Hello, my people. It is good to be here again, reaching out to you from the Village Boy Academy. Thank you for all your comments. Thank you for all the feedback. These are the things that help us to continue to do it better for you. Thank you for some of the questions I have been asked about the strategies for debt recovery. Somebody asked me if you try all these methods or these strategies and you are still not able to recover your money, what do you do next? The wise choice at that moment is to write off. And that is where we have to be mindful of what we do from the beginning. From the moment we are developing our policy for credit, granting. So we should be able to, you should be mindful of what the end result could be, so that at the end of the day we are able to mitigate ourselves against undue exposure to debt. Because with too much debt, our efforts, they actually go, unrewarded. So a business, that is why you see in the neighborhood sometimes a business that was once profitable, just closing shop, and it is what it is. It is unfortunate, but what we can do is to equip ourselves with the adequate knowledge that we need to manage such occurrences from happening to us. Today I want to move a step further. I want to look at how do we understand business costs. Of course, I believe we have elementary understanding of what the cost is in business. Cost is the amount you spend, to generate, the benefit or the value, which is usually called revenue or income for the business. Either you are rendering service, or you are selling product, or you are producing products. There are some costs you have to incur. So it is what you have incurred, that cost. It is different between what your customer pay and the cost that is called profit. But I would try as much as possible to break this thing down in its various elements. So usually that's what we call the principal cost is the cost of sales, because that is the cost, the direct cost. Sometimes people call it direct cost, because this is the cost in which you incur to earn the income, to generate the revenue. For instance, if you are selling, if you are a bread seller, let me use a very simple example. You go to the bakery to collect some loaves of bread, and you come, you put them in the in nylon or a wrapper, and you sell them to your customer. So what it costs you to acquire that bread from the bakery is your cost of sales. Or of course, sometimes we add the cost of transportation. I mean, what it's the cost of delivery, what it costs you to bring the bread, the loaves of bread from the bakery to your house, whereby you now be displayed for sales, or when you supply it to companies or to individuals. So we add those costs to call it your cost of sales. That's your direct cost of sales. Or if it is an equipment, what it costs you to deliver it. So delivery most often is added to the actual cost of the product you are selling. In the manufacturing environment, it could be a bit more complex, but it's basically the same principle, because especially when you are looking at you have various materials, raw materials that you have to couple together to produce the good. For instance, the baker who is producing the bread is going to buy flour, is going to buy margarine, is going to buy whatever raw materials that he will use to make the bread. So all those raw materials and the cost of bringing them to his factory, to his bakery, they will be his cost of sales. So when you have sold and you generate extra revenue, you have to first remove your cost of sales directly from it. So that will give you what we call the gross profit. Your gross profit is not your profit, it's not the end profit. So sometimes you hear people talk about bottom line. Your gross profit is not your bottom line. Your bottom line, I will explain that in a moment. So When you deduct your cost of sale from your revenue, you now get what we call the gross profit. So after that gross profit, you now remove your expenses. Expenses, could be maybe the rent, it could be the cost of advertising, it could be the cost of your telephone, it could be the cost of your other things that you incur. In the process of rendering that service or selling that product. So that become your expenses. So when you now deduct your expenses from your gross profits, that you now have your net profit. So in terms of economies, the basic factors of production, they have their various segments in this. Land, labor. Land may require the rent. What you pay for rent, is what you pay to land. Capital is the money you raise, your equity in the business, your initial seed. Whether it could be by, yourself or loans and all that. So that's the capital you bring into the business. And of course, labor is the wages, what the salary you pay to if you have workers, or what you pay to yourself. So that constitutes your labor. So the entrepreneur, which is the profit, it is the net profit that goes to the entrepreneur, not the gross profit. Because out of the gross profit, you have to deduct other expenses before you can. It's the residual amount, which is called the net profit, that actually goes to the entrepreneur. So you will see in this analogy, the four factors of production get different reward for their input into the business. So that's why sometimes we say business owners should always detach themselves from the business. So if you are a business owner and you also have you also contribute in terms of labor to the business, then you pay yourself salaries or wages. So you are paying for labor. So the different, is like, because you are playing double role now as giving labor to the business and as an entrepreneur. So you are entitled to both salaries and to profit, because salary is even more guaranteed than profit at the end of the day. But costs are not just costs. There are some elements of cost. Usually we break costs down into 3 elements. And these are very important, because if you don't understand this, it may be difficult for you to manage your costs. So that's what we call fixed cost. Fixed cost is that's cost you incur irrespective of your level of activity. Either you are selling in thousands or in millions or in tens or in hundreds, these costs you must incur them. One of the principal costs of fixed cost is your rent. If you rent a shop or you rent a warehouse whereby you display your goods, if you, again, let's use the example of the bread seller. If you sell 30 loaves in a day, or you sell 100 loaves in a day, the rent for that apartment, for that building, for that shop remain the same. It doesn't matter whether you sell little or you sell much. So it is called fixed because you are going to pay that amount for the period that you use it. If you use it for a month, if it is on monthly rent, you pay it on monthly basis. If it is on yearly basis, you pay on yearly basis. So these are fixed costs. And of course, there are other elements of other fixed costs. Those things those costs you must incur irrespective of your level of activity. That is what we call fixed cost. And of course, we also have what we call semi-variable costs, which are costs that are partly fixed and partly variable. So partly fixed is, like I explained, it doesn't matter the level of activity you are involved in, you have to pay the fixed cost. But the variable has a lot to do with the level of activity. For instance, if you buy nylon, maybe from wrapper for the bread, for instance, the cost per each wrapper has to do with the bread. So if you are going to spend you want to buy 10 wrappers, it means you want to sell 10 loaves. So you can now say, okay, the variable aspect of this is, because it is the number of bread, the number of loaves that I sell that determine the number of wrapper that I use. But there are some costs, like your electricity, for instance. It's usually a mixture of fixed and variable elements. Those who understand how they calculate the electricity bill, that's what we call demand charge and utilization, which means there's a fixed amount you pay every month because you use public electricity. So that and then the number of units you consume. So you also charge for that one in addition to the fixed element. So these are kind of costs we call semi-variable cost. So they are partly fixed and they are partly variables. Again, the fixed element of it has nothing to do with number of units you consumed. So if you consume 100 units, there is a fixed element in it. There is also the variable element in it. So that is why you will see on the average somebody who is consuming 100 units and somebody that is consuming 300 units. You will discover that the cost incurred by the guy consuming 100 units and the guy consuming 300 units, it may not be necessarily ratio 1 to 3 because both of them are paying the fixed element of it. So that is why you say maybe somebody who is consuming 300 units is paying like maybe 270, and you that you are consuming like 100 units, you are paying like 110. So that calculation shows that okay, there is a fixed element in that calculation. So which means that even when you are consuming 1 unit, there is the basic, cost that you will incur. And of course, the variable element is the unit, the amount you consume per each unit of whatever material, service, or that you incur. So, for instance, if you take a bus, for instance, to load 300 loaves of bread, and you are able to take a bus, and they say they are going to charge you this. So next tomorrow, when you transporting about 250, you might end up paying the same thing because there's an element of fees and variable in that, or they don't even charge you for variable. So those are the kind of costs you have to be very mindful of. Why is this important for you as an entrepreneur? You have to understand this because in our next video I'm going to explain to you how you can manage your costs to achieve maximum profit, maximum benefit. Because what most entrepreneurs do is they apply this principle of cost cutting. They cut costs. Oh, don't pay this, don't pay that, and that over time they run into trouble. But when you understand this element that I'm trying to explain today, the fixed element of your cost, the semi-variable element of your cost, and the variable element of your cost, you will be able to manage your costs better than somebody who doesn't understand that those relationship about them. So your revenue, which is your gross revenue, that's the amount you charge to the third party, the amount you charge to your customer, that is your revenue or your income. So the cost of sale is the one that is directly related to that product, to that service. So, and when you take away your direct cost, which is called cost of sales, from your revenue or from your income, what you get is your gross profit. It is very, very dangerous to start thinking that your gross profit is your profit. Yes, it is called gross profit because they have direct relationship. But after that gross profit, then you have to deduct all other expenses like your salaries, your wages. Like salary, for instance, salaries can be a semi-variable cost sometimes because where there's an element of fees, because it doesn't matter what a worker produces in a month, you get the same salary. But when you are in the wages environment, you are paid per hour. But then, because your productivity per hour will not be even, it will not be the same for every hour. So you can see some element of fees and variable even in wages. If you do critical costing. So when you want to cost your production costs, most of this will come into play. I'm not going too deep into that for now. But what I just want to give you an idea is like, how do you measure your profit? How do you measure the bottom line? These very steps are very important for you to know that. Okay, when you deduct if you are a seller of what you don't produce, for instance, so what it costs you to acquire the product from the producer or from the distributor, plus the amount it takes you to take it to your place, the terms of transportation, that become your direct cost. So when you take that one away from the amount the customer pays, you get what is called your gross profit. And of course, we still incur other expenses. Sometimes you store it in a place, either you rent it or it's your own apartment. Then you pay for labor, you pay for carriage, you pay for transportation, you pay your electricity bill, you pay for rent, you pay for all those ones. It may be a portion of the rent per month for all those ones. Then you have other assets, you depreciate. All these ones from your other expenses. So when you take away you add all the expenses after your gross profit, and you take those expenses and you take them away from the gross profit, then you have your net profit. So it's this net profit that is called bottom line. And this is where many small scale MSM, they don't get it right, because when they just collect money from the customer, they just take away what they want to pay to from their supplier and everything, and they are no longer mindful of their other expenses, and they think they have made profit, and they spend money in that regard, and over time they find out that nothing is left, because they do not understand this basic mechanism of calculating your net profit. Your net profit is your bottom line. Your net profit is the reward to the entrepreneur, the effort of decision making and all that, planning and all that, which is the duty of the entrepreneur. So that is what comes to you. So you take your cost of sales from your gross profit, then from your gross profit you take all other expenses, which may include your labor, which may include your salaries and wages. So when you have taken all these other expenses that are related to that business, then you want to have is your net profit. And of course, if you are, after that, you also take away what is due to government, which is tax. So which is now what you call profit after tax. The profit after tax is the real thing that comes to you. In big company, it is that profit after tax that they share part of it as dividends to investors, to shareholders. So we have to understand this, because this helps us to manage our finances very well. There are so many businesses, the moment they begin to see the money, and since the money is growing, they just spend anyhow. So they don't bother to sit down and calculate, okay, how much profit have I made in a month? So because that will determine how much I can spend on myself. If I begin to spend out of the gross profit, I may soon run into trouble, because those expenses are necessary. That's why you may see a business person that is making money, that's making profit, is not able to pay the shop rent, the office rent, when it has and when due. So these are the things you have to pay attention to. Remember, there are three types of costs. We have fixed costs, we have semi-variable costs, and we have variable costs. Fixed cost is like you incur it irrespective of your level of activity, and your semi-variable cost is a cost that has a bit of fixed in it, and another bit of the element of variable. And of course, your variable cost, it has to do with the unit. That depends on the unit of activity, either you need the unit of product or unit of service that you incur during that period. So it has a direct relationship with level of activity. That is the variable cost. And of course, out of your profit, out of your sales, your revenue, the cumulative revenue, you take away your cost of sales, the cost of rendering service, or your cost of the product, which is called cost of sales. So when you take away the cost of sales from your revenue, you get gross profit. But that does not end there. Your gross profit is not yet ready for sharing or distributing or just spending anyhow. Then you take care of all other expenses that are directly related to the business. If you take out of your gross profit, you pay your students' school fees, that is not part of business expense. It's like you're already spending the money that has not really belonged to the entrepreneur. The gross profit belongs to the business, and the business again, out of that gross profit, we say, okay, what are other expenses? What are those things that I need to incur to be able to even generate that revenue? So you have your other expenses, which may include your rent, your electricity, your telephone bills, and all sorts of expenses, transportation, warehouse rental, and so many of them, all sorts of expenses that you incur for your business. Then when you have aggregated this, you have accumulated all these expenses, you now take it away from the gross profit. Then you have your net profit. But in practical terms, your bottom line is even not that, it's not yet that. Your bottom line is the when you now take what is due to government in terms of tax. When you take your taxes away from your net profit and you have your profit after tax, that is ideally your bottom line. But it's very funny that in most instances, you see some businesses calculating and thinking that the gross profit is the bottom line. No, gross profit is not the bottom line. Even the net profit is not ideally the bottom line, but it's close to the bottom line, because depending on there are instances that your net profit could be your bottom line, especially if you are maybe on tax holidays, or I don't know, you have a cumulative loss that you are recouping, and thereby you are paying zero business tax for that period. So in such instances, your net profit could be your bottom line, but the bottom line is profit after tax. So after you have taken from the gross profit or the other expenses, you have your net profit, then you pay government taxes, then after that you have your profit after tax, or which you call PAT. So that profit after tax, that is what comes to the entrepreneur. That is your bottom line. So I hope that you'll be able to understand that to simply calculate your bottom line, so that when you are dipping your hands into business money, you know whether you are eating from the gross profit or you are eating from the net profit. So in our subsequent video, I will try to explain how you can manage your costs to achieve the best. Like I said earlier on, I don't fancy the idea of a cost cutting. Just reduce the costs. Cut the cost. You cannot continue to incur this. There are better ways you can manage your costs, and you see achieve a better result, over a long period of time. Thank you for taking your time to listen to what we have to offer you to help you promote your business. Remember, don't keep this to yourself. Watch it, share it with your friends, and subscribe. If you have already subscribed, thank you very much. When you are sharing it with your friends, also remind them to subscribe, so that together we can continue to share tips on how we can run our business more profitably. So until I come your way next time again, I am your village boy. Thank you, and God bless.